Welcome to the Deep Dive. There's just so much information flying around these days, especially when you're trying to get a handle on a complex company. Today, we're going deep on one that's definitely been making waves, Palantir Technologies, ticker PLTR. You've probably heard the name mentioned alongside, big data, AI, those big government contracts.
That's right. And we're not just scratching the surface here. This deep dive is based on a whole stack of sources you gave us. We're talking recent financials from TradingView and macro trends, some really detailed company analysis from Simply Wall Saint, and even insights straight from Palantir's own Q2 2025 earnings webcast transcript.
Yeah, so our goal here, our mission, is pretty straightforward. We want to cut through all that noise, pull out the really important stuff, the key nuggets, and give you a shortcut to understanding Palantir's, unique business model and the recent financial performance, which is pretty remarkable, frankly. Plus how the market seems so divided about them. So where do we start? Let's maybe unpack this first. Before we dive into the fascinating numbers, let's just establish who Palantir is. What do they fundamentally do? There's a lot of buzz, but what's the core purpose?
Okay, good place to start. So Palantir was founded back in 2003. Some big names involved, Peter Thiel, Alex Karp. And their core business, really, is building and deploying these complex software platforms. Think of them as central operating systems for their customers.
Operating systems for data.
Exactly.
Right. Okay.
And they split this into two main areas. There's the commercial segment, that's for, regular industries, non-government, and then the government segment, which serves U.S. and international government agencies.
Right. And we hear about them in some really critical areas: defense, intelligence, healthcare too, energy, finance. It seems like they're helping organizations handle huge amounts of data, analyze it, and make big decisions right. Even things like counterterrorism.
Precisely. It's about making vast, complex data actionable. Their main platforms are Palantir Gotham. That one's really geared towards finding hidden patterns in diverse data sets, like signals intelligence, informant reports, that kind of thing. And it helps bridge the gap between the analysts finding the patterns and the operators who need to act on them.
Okay.
And there's Palantir Foundry. That's more about creating that central operating system for an entire organization's data. So different users across the company can integrate and analyze data all in one place. And lately, their AIP, the artificial intelligence platform, that's become a huge focus, a key driver, really.
Got it. So understanding Gotham, Foundry, AIP, that's pretty crucial background. It sets the stage for how they're getting these, eye-popping results we're about to talk about.
Yeah.
It's about selling these sophisticated integrated systems. And speaking of results, let's get into it. Q2 2025 earnings. They dropped some numbers that are, frankly, head-turning. What did they reveal?
Yeah, the Q2 highlights were strong, very strong. First off, revenue. They broke $1 billion in quarterly revenue for the first time, $1.004 billion. And overall revenue growth actually accelerated 48% year over year.
48%. Wow.
And then you looked at efficiency. They hit their highest ever Rule of 40 score. It was 94. Now, for anyone listening, the Rule of 40, that's a benchmark for SaaS companies. Growth rate plus profit margin, over 40% is good. Hitting 94, that's an 11-point jump just from the previous quarter. And it's their 8th straight quarter where that score has gone up.
That really signals a healthy operation, doesn't it? Growth and efficiency.
It does. They also reported adjusted operating margin of 46%, and adjusted free cash flow was $569 million. That's a 57% margin on that cash flow.
Okay, that Rule of 40 number really jumps out, but looking closer at the details, it feels like the U.S. market is the real powerhouse here, correct?
Oh, absolutely. The U.S. business is firing on all cylinders. Overall, U.S. revenue grew 68% year over year, and 17% just sequentially from Q1. The U.S. now makes up 73% of their total revenue.
73%. That's a big chunk.
It is. And within that, U.S. commercial, that growth was astonishing, 93% year over year and 20% sequential growth. That segment alone is now 31% of their total Q2 revenue. A year ago, it was only 23%.
Huge jump in contribution. And the U.S. government side?
Still very strong. Grew 53% year over year, 14% sequentially. International was a bit more mixed. International commercial actually declined 3% year over year, though it ticked up 2% sequentially. But international government grew nicely, 37% year over year, mostly driven by the UK, it seems.
So domestic growth is just booming, and it sounds like it's not just getting more from current clients, but they're signing big new deals too.
Yeah, the deal momentum is significant. They booked their highest total contract value TCV ever. $2.3 billion. That's up 140% from the year before.
Wow.
And annual contract value, ATV, also hit a record, $684 million. They closed 157 deals worth $1 million or more. 66 of those were $5 million plus, and 42 deals were $10 million or more.
So landing bigger fish, too.
Seems like it.
Yeah.
And extending with existing ones, their top 20 customers, they now average $75 million a year in trailing revenue. That's up 30% in just 1 year. The U.S. commercial TCV booked was $843 million. That's 222% growth year over year.
Incredible growth rate.
Yeah. And looking forward, total remaining deal value is $7.1 billion, up 65%. Remaining performance obligations, $2.4 billion, up 77%.
That's a lot of secured future revenue. And they seem pretty confident about the near future, too, given their guidance.
They definitely raised expectations. For Q3, they're guiding revenue between $1.083 and $1.087 billion. That would be over 8% sequential growth and 50% year-over-year growth.
50% again.
And for the full year, 2025, they bumped up the midpoint of the revenue guidance to $4.146 billion. That implies 45% growth for the whole year. And it's a pretty big jump, 9 points higher than their previous guidance. They specifically called out full-year U.S. commercial revenue, too, expecting it to top $1.3 billion. That's at least 85% growth.
85%, just stunning numbers for that segment.
It really is. And they made sure to reiterate their commitment to sustained GAAP profitability as well.
So for you, the listener, these aren't just stats. They paint a picture, right? A company scaling incredibly fast, seeing strong demand, especially in the U.S., It's about turning these complex data tools into real, tangible financial growth. Okay, so what does it all mean? Beyond the numbers, what's really driving this? How are they making themselves so indispensable, especially with all the AI hype? And, how do we square this with the very different ways the market seems to view them?
Right, the why behind it. Well, Palantir's AI strategy is quite specific, and they argue it's central to this success. CEO Alex Karp, he's pretty vocal. He's argued that large language models, LLMs, the tech behind things like ChatGPT, he calls them, at best, a jagged intelligence that make catastrophic errors on their own in complex real-world situations.
Okay, strong words.
Yeah. He contrasts that with Palantir's ontology. He describes that as pure understanding concretized in software. He basically asserts that LLMs simply don't work in the real world without Palantir.
So what exactly is this ontology in their view? How does it make the difference?
Think of it like a detailed, structured map of a customer's entire world, their operations, their data sources, the relationships between everything, the rules. It's machine readable. It gives their AI a deep, contextual understanding that, they argue, generic LLMs just don't have. It lets the AI reason about the specifics of that client's business or mission.
So it's not just the AI model, it's the framework it operates within.
Precisely. And their AI platform, AIP, isn't just software clients use. They position it as software clients are building their own software on top of. The claim is it allows customers to replatform and get value 10 times faster. They also mention AIFD for automating tasks, autonomous execution.
That's a very bold claim, that their ontology is the key missing piece for real-world AI. How are customers actually seeing this play out? Any specific examples?
Yeah, they highlighted several in their earnings call. Citibank, for example, apparently reduced customer onboarding KYC checks from 9 days down to seconds.
9 days to seconds.
That's the claim. Fannie Mae decreased the time to discover mortgage fraud from 2 months, again, down to seconds, saving millions. Nebraska Medicine reported a huge jump, 2,100%, in using their discharge lounge effectively. They even coined a phrase, the Palantir unit of time, meaning getting value in under an hour.
Yeah, okay. That's quite a statement.
Isn't it? Lear Corporation, the auto supplier, signed a 5-year extension. They use Foundry and AIP across 11,000 users, over 175 different use cases. Things like tariff management, administrative workflows, even balancing manufacturing lines. They say it gives them a first-mover advantage.
Okay, so tangible business process improvements. What about the government side? Big contracts there, too.
Definitely. Significant deals mentioned. U.S. Space Force awarded a $218 million order for multi-domain warfighting capabilities. The Maven Smart System contract ceiling, that's an AI project for analyzing drone footage, was increased by $795 million. And the big one, a 10-year enterprise agreement with the U.S. Army. Potential value up to $10 billion. That consolidates 75 existing contracts.
$10 billion potential. That's huge.
It is. And Palantir frames this work, interestingly, as arming the working class and giving blue-collar workers AI agency-enhancing skills.
That's a fascinating way to put it. It also ties into their sales strategy, right? which is apparently quite unusual.
Very unusual. They emphasize operating effectively with no direct sales force in the traditional mold. Their main sales channel, they say, is their current happy customers who become advocates. They focus on demonstrating value creation quickly, which they believe gives them enormous credibility right from the start.
So it's less about a pitch deck and more about show don't tell. Almost like a viral loop driven by results.
Kind of, yeah. A focus on impact driving adoption.
Okay, and to keep this going, you need the right people. What's their approach to attracting and keeping talent in such a competitive tech world?
Their angle is attracting people by giving them access to problems that matter. Working on complex, high-stakes challenges. They foster this culture where being a Palantirian is positioned as a kind of new credential, separate from traditional markers like class or background. They've even claimed it's becoming the most important credential in tech.
Strong internal culture, focus on impact, unique sales model. But obviously, with this kind of rapid growth and valuation, the market has opinions. Very different opinions, it seems.
Oh, absolutely. This is where the picture gets really polarized. And it explains why the stock is so volatile. Its beta is high, between 2.25 and 2.59, meaning it moves much more dramatically than the overall market.
Right. So what are the two sides of the coin here? The bull case?
Well, the bulls point to the undeniable stock performance. Up over 566% in the last year, 1,500% in 3 years. Some analyst price targets are way up there, like $178. You see chatter in investing communities calling it undervalued, even a $1 trillion company in the making. They focus on the AI angle, the deep defense ties, the idea that Palantir doesn't have direct competition in some of its niches, and the CEO's own extremely confident language calling the recent results once in a generation, the single most impressive number any enterprise software company's ever seen. That certainly fuels the bullish fire.
Okay, that's the enthusiastic view. What about the other side, the skepticism?
The skepticism centers heavily on valuation. The price-to-earnings ratio is, well, extremely high, around 673 times earnings, and the price-to-sales ratio is also very elevated, about 121 times sales.
Those are big multiples, even for tech.
They are, and while high-growth tech often commands high multiples, these are at the very high end, leading many to label the stock overvalued. You literally see headlines like, hot take, PLTR is a bubble, or a big correction coming soon, or even just 92 times sales is absurd. There's also been analysis pointing to significant insider selling over the last 3 months or so, which some bears take as a negative signal.
So incredible growth and potential on one side, but serious valuation concerns and questions on the other. A real tug-of-war in perception.
Exactly. High growth, high valuation, high conviction on both sides, leading to that high volatility.
Okay, so let's try to quickly recap this deep dive. We've unpacked Palantir's kind of unique dual-segment business, commercial, and government. We've looked at that really remarkable Q2 2025 performance, heavily driven by the U.S., and big deal momentum. We've explored their distinct AI strategy based on this ontology concept. And we've definitely highlighted the vibrant and, frankly, conflicting views in the market about its valuation and where it goes next.
Indeed. Palantir is just a fascinating case study, isn't it? A company really trying to carve out its own path in enterprise software with a very specific take on AI and these quite unconventional strategies for sales and talent. It makes them a truly unique player out there.
So as you, the listener, process all of this, maybe we can leave you with a provocative thought to chew on. If Palantir's core claim is actually true, that its software, especially this ontology-driven AI, genuinely provides an unfair advantage, and that it's essential for making AI work effectively in the messy real world, what does that really imply? What are the downstream consequences for the future competitive landscape, not just in tech, but across government, healthcare, manufacturing? What does it mean for the role of these specialized AI platforms versus the more general LLMs in deciding who wins and who loses?
Right. It really raises the question, are we seeing the start of a new paradigm? A future where these highly opinionated, deeply integrated AI systems, like the ones Palantir builds, become the absolute foundation for operational excellence? Could they end up dictating who leads and who lags behind in this incredibly fast-moving AI era? It's certainly something to think about.